Good morning, everyone. This is Marshall Gittler bringing you the morning comment for August 11th. The story on Friday was all about risk, or more accurately, diminishing risk. The FX market is all about geopolitical risk nowadays. And with the US entering the fight in Iraq and Russia talking about mediating between the government and the rebels in Ukraine, global risks are decreasing and risk appetite is increasing. As a result, the safe haven yen, gold, and Brent oil prices fell while stocks rose. The dollar generally weakened, which reflects its safe haven aspect in the face of global turmoil. Now, as confidence returned to carry trades, EM currencies came roaring back, with the dollar weakening against all the EM currencies that we track. The dollar is still higher over the week, though, against the Brazilian real, the Russian ruble, and the Eastern European currencies, plus the Mexican peso and Turkish lira. Those are the currencies that might be worth looking at if you think the rebound in risk appetite is likely to continue. The New Zealand dollar was the worst performing G10 currency over the last week, but it's important to note that all of the decline came on Wednesday, when dairy prices collapsed to the lowest level since 2012, and there was disappointing employment growth that sent the currency down sharply. The New Zealand dollar has been recovering gradually since then, and I think it could gain further this week, as there are no major New Zealand indicators due out to derail its progress. The Canadian dollar was the second worst G10 currency. Most of the decline there came on Friday and followed disappointing employment data. Also, the S&P Friday cut its rating outlook for several of the major Canadian banks to negative on new rules limiting government support if they get into trouble. I'd expect the Canadian dollar to remain under pressure, at least for the next several days because of this. On the other hand, the Norwegian krone was the best performing G10 currency, but that could be in for a change today. Norway's CPI for July is due out today, and both the headline and underlying figures are expected to decelerate on a year-on-year basis. That could be negative for the currency. Norway has been one of the few European countries where the central bank isn't confronting below-target inflation, but this expected slowdown in inflation may cause some concern at the Norges Bank. It could therefore be the occasion for some profit-taking in the currency. Elsewhere, there's a very light calendar of events today. No major data from the Eurozone, UK, or US. During the European morning, US Fed Vice Chair Mr. Fischer will speak on the economy and monetary policy in Stockholm. He will be taking questions, so we could get some important insights into Fed policy. From Canada, housing starts for July are expected to decrease. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX Global, wishing you solid trading.